Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the Aussie dollar US dollar FX for Tuesday, June the 19th, 2012. Well, a continuation of the trend to the upside today. We have a candle that's made a higher high and a higher low, and a fairly large white-bodied candle, denoting the buyers maintaining the momentum that they've had over the previous 4 trading days. The large white body denotes the buyers making significant net bullish progress, and they've traded up above the 101.44 level, a previous level of resistance for this market. Previous day's trading, we had a potential hanging man type reversal pattern. The market traded nowhere near the low of that pattern, so there was no confirmation of that pattern, and the buyers have continued on their way up, taking this market to higher highs and higher lows. We also have the buyers closing up towards the high once again, as we've seen for the previous 4 days, and closing this market with control, and that's quite significant that they've been able to maintain control for this period of time. Just looking at the pattern that we highlighted previously, this ascending triangle type pattern, where we had the equal peaks within the pattern but the higher troughs, which suggested that the market would break out to the upside and would be a continuation pattern. We have had the market basically reach the target. The target for this pattern was just below the 102.18 level, and we've almost traded there. We've traded to 102, and we have had some selling coming in, some minor selling around that level. Now that area also coincides with the bottom of the cloud, and there is very strong potential for the market to find resistance there, and for the market to either relax and trade off to a degree. When we look at this bullishness that we've had 4 days in a row with the buyers maintaining control, it wouldn't surprise to see the market retrace part of that uptrend, or at least for the market to go sideways and not continue the series of higher highs and higher lows. We do need to wait and see how the market develops, however, but with this 102.18 area and the cloud within this region, there will be very strong resistance to this market trading higher. In terms of Ichimoku, the market is basically at the moment still trading below the cloud, so we have an overall negative bias, but we're very close to it, so the market is almost neutral. The market is finding equilibrium in that longer term time frame, so that's quite significant. We know markets move away from equilibrium and back to equilibrium, and that's what's happening here, and sooner or later the market will move away from the equilibrium as described by the cloud in the longer term time frame. We also have a bullish market in the medium and fast term timeframes by trading above the Kijun-sen, the pink line, and the Tenkan-sen, the green line here, and both of those are pointing up fairly sharply, highlighting the strong upside momentum that we're seeing in this market at the moment. If we look at the way this current candle is developing, it's a small black body candle, has failed to take out the high of the current or the trading day that has just finished, and if that happens, we're likely to see a flat Kijun-sen. Now that could change, but at the moment it's flat, and if we do see that Kijun-sen turn flat, there will be a strong likelihood that the market will retrace. If we do see the market come off, we have strong support at 101.44 and then down at 100.43, and certainly around the $1 round number level, which coincides also with where the Tenkan-sen is trading. In terms of the Fibonacci extension, we're examining the relationship of the current uptrend to the prior time the market was trending up, and the market has taken out the 161.8% level in a very bullish manner. But we do have the market interacting with the cloud, so I'd say it's highly unlikely that the market will trade to the 261.8% level. There is a possibility, but with this cloud around here, it certainly won't be doing it, I doubt, before we do see a change of trend in that first time frame. If, however, the market does trade up there, then that will offer that area as very, very strong resistance combined with the resistance at the cloud. And in terms of the Fibonacci retracement of the prior downtrend, we are in an expansion mode. We've traded past 100%. The market failed to find resistance at the 161.8% level with a bullish close above there, and the trends continued on. The 261.8% is within the cloud, not too far away. If the market does continue trending up, then certainly that will make the 102.63 area very, very strong, combined with the resistance from the cloud in that region. But just summarising, in the long-term time frame, the market is technically just bearish, but certainly pretty much neutral. Bullish in the shorter time frames and the medium and the faster term time frame. The buyers are in control of this market. They're very strongly committed. They have been for the past 4 days, but they will face some stiff opposition now from the resistance around the 102.18 level and the cloud, and the resistance from the cloud at the moment extends a long way up past the 103.77 level.